welcome you all here this afternoon to this discussion of blockchain and banks, particularly the application and the potential for blockchain technologies in the Asean region. As was just said, my name is Ross Leckow. I'm Deputy General Counsel of the IMF. And I should explain, I think as some of you know, that the IMF is an international organization based in Washington, D.C., whose membership consists of the governments of 189 different countries, almost every country in the world. And our mandate is to promote the stability and effective operation of the international monetary system and the global financial system. And I think for this reason, our interest in fintech should be fairly obvious.
Well, as was introduced, my name is Brad Garlinghouse. I have the good fortune of being the CEO at Ripple. For those of you not familiar with Ripple, Ripple sells a set of technologies to banks and other financial institutions that dramatically accelerate the ability for banks and regulated financial institutions to settle transactions between each other. We have a series of products ranging from fiat to fiat transactions, also transactions leveraging digital assets. Native to our tech stack is a digital asset called XRP that we allow banks to eliminate the need for pre-funding. I should point out that from our point of view, the challenge that many different markets, certainly true in Asean as well, is how do we take transactions that today might take a wire transaction from Singapore to Bangkok, days to settle, and the expense would be quite high. How do we reduce the friction as measured by speed and time and transparency and dramatically improve that? By doing that, we think we can dramatically change a lot of different factors, some of which we will talk about today. So a couple things that are unique about this format. I'm actually interviewing Ross, and he's interviewing me. So we're both moderators. Also, we are going to leave time at the end for audience questions. So to the extent you have not used Pigeonhole, encourage you to try that out. And we'll put questions up on the screen that we'll take with the last 10 minutes or so. All right, so with that opening, Ross, tell us, what does fintech mean to the IMF, and what is the IMF's interest in it?
Thank you, Brad. First of all, I should say that the IMF is devoting a lot of attention to fintech, and in particular blockchain. But we think that it's difficult to talk about blockchain without considering it in the light of the other new technologies that are forming part of the fintech debate. And we include a lot of different technologies in this space, within this concept, including, of course, the internet and cloud computing, distributed ledgers and blockchain, of course, and the crypto assets that are associated with them, big data and artificial intelligence, biometric data, application program interfaces, and of course, mobile phone technology. And, our 189 member countries, or many of them, are coming to the IMF for advice, given their interest in these issues, looking for guidance as to how to approach and unlock the potential of fintech, while at the same time putting in place regulation that guards against the risks. So right now, the IMF is doing a lot of work in this space, and it consists of several different initiatives. First of all, we have a very active program of research and publication. We've published major studies on what were then called virtual currencies, aka crypto assets, and on the potential impact of fintech on the cross-border payments market. We are engaging very closely with the private sector and the industry, and last year put in place a high-level advisory group of industry leaders from the private and public sectors to help guide us in our work on fintech. I'm very happy to say that Chris Larson, one of the co-founders of Ripple, and Sapnendo Mohante from the Monetary Authority of Singapore are both part of that group, and we're very grateful for the advice that they give us. And thirdly, we're engaging very actively with our member countries, using our convening power to bring them together to discuss experiences in unlocking the potential of fintech and blockchain, but also in beginning to design regulatory frameworks that help mitigate the potential risks. And in particular, given the demand for advice in this area, at our annual meetings at Bali last month, we and the World Bank jointly launched an initiative called the Bali FinTech Agenda, which we think is the first comprehensive framework of issues that countries need to think about when designing policy around fintech. And this will be an anchor for much of our work going forward. So Brad, maybe I can ask you now, from your perspective in the private sector, what's going on right now in the ASEAN countries? And in particular, what are the specific challenges and opportunities that blockchain presents for them?
Sounds good. I'll start by saying I want to know how I get invited to the IMF annual meeting in Bali, because that sounds pretty good. So, there are a number of unique things going on in ASEAN countries that I think are worth calling out. And I think really the reason why Ross and I are up here together in some ways is I think first and foremost is regulatory clarity has a huge impact on the ability to drive blockchain and digital asset adoption. And I think, we're here in Singapore. Singapore certainly is one country that has done a lot to be a leader in this space, and that regulatory clarity has enabled the market to invest in it with clarity. Thailand would be another country that we've seen that has expressly and explicitly legalized and endorsed digital assets, including XRP. We've seen some of that same activity in the Philippines. And so the first dynamic that I think has impacted blockchain adoption across ASEAN markets, and certainly for Ripple, is regulatory clarity. And that remains important. And frankly, it's surprising to me how many markets you still have a lot of uncertainty. There's no doubt in my mind that you're seeing real use cases where you're solving real problems for customers. And if we can have that regulatory certainty, and I'm talking about for Ripple, but I'm also talking about for other companies in this space also, the more quickly we can see adoption of those technologies. So the first dynamic, I think, is on regulatory clarity. The second dynamic is, this is a market where the ASEAN countries have over 100 billion, almost $130 billion of inbound remittances. And so when you have that type of volume of remittances, and that remittances, as many people in this audience know, are often the most expensive taxed through the costs and friction of cross-border payments today. And so it's a market that's ripe for adoption to take advantage of blockchain technologies, certainly Ripple's technology, and driving those costs dramatically lower. The third dynamic that's actually interesting to see unfold here in the ASEAN markets is, in some ways, the current kind of SWIFT-enabled correspondent banking is leaving some of the ASEAN markets behind. As banks have contracted their correspondent banking relationships, some markets, whether it's Laos, Cambodia, Myanmar, have actually seen their correspondent banking relationships contract, which is a problem for these economies in these markets. And so it's made this ASEAN market, I think, a ripe market for adoption of blockchain technologies and digital assets. Ripple now sees 50% of all of our global customers here in the Asian markets, and so it's been a very ripe, ripe group for us. Our Singapore office has grown dramatically, about 200% in the last year, and we see that continue to grow through the course of next year. Back over to you, Ross. So, as the regulatory expert, what are the characteristics of ASEAN that you think will either propel this region forward in regards to blockchain or stifle its path?
Really hard question. First of all, I have to say that when you discuss legal and regulatory frameworks around blockchain or fintech globally, not just here in the ASEAN countries, we're at a very early stage of the conversation, and a lot more work needs to be done. And I think it's also important to note that when you talk about the ASEAN countries, you're talking about a very diverse group of countries at different levels of development, in different circumstances, and with different needs. And against that background, it's not surprising that some are perhaps further ahead than others in thinking through policy in the area of blockchain and fintech. And it's not surprising that some of them have taken different regulatory approaches. You mentioned crypto assets, where some countries have put in place regulatory frameworks, whereas others have banned them. But against that background, I think a few important points can be made. The first is, I think there's a general openness amongst many countries in the region to embrace the potential of fintech and think about policy that will allow innovation to happen. Secondly, I think there's a general willingness amongst many of these countries to engage with the private sector, to understand the technologies and the business products and services they're developing, but also to help the private sector understand the regulatory concerns that they raise. I think it's been said that fintech firms in this region are perhaps more willing than their counterparts in other jurisdictions to engage with regulators at a relatively early stage of product development. But I think the most useful example of this process consists of the regulatory sandboxes that countries in the region have put in place, including Singapore, Malaysia, Thailand, and Indonesia. These basically serve two purposes. They first allow new products and services to be tested in a controlled environment, but they also enable regulators to understand the new products and services in ways that will inform regulation in future. I think another important feature, if you will, or point that can be made is that in cases where countries have seen potential use cases that will actually help the population and the financial system, they've been willing to put in place regulation to enable those use cases to go ahead. A good example of this is the cross-border remittance market, with the use of crypto assets as a rail to transfer currency across borders, where this obviously is a very important issue in this region. You have countries like the Philippines and Thailand putting in place regulation around crypto exchanges that address regulatory concerns, including money laundering and terrorist financing concerns, that allow this use case to develop. Thailand, I know, has also put in place guidance around blockchain technologies more generally, and I think these are important developments. I think it's also true that regulators in the region have demonstrated a willingness to engage with each other and also with their counterparts in other parts of the world. Some of the countries in the region are part of the UK's Global Sandbox initiative, and also developments like the Financial Innovation Network here are an excellent example of cross-border cooperation in ways that involve different stakeholders in the process in developing solutions to problems. And finally, perhaps two more points, is I think there's also a recognition, particularly here in Singapore, about in designing policy around fintech, it can't be looked at in a vacuum. It has to be a part of a broader conversation and strategy about digitization in the economy as a whole. And then finally, I think we all have to recognize, as I say, that we're still at an early stage in many areas, and certainly in this region, as is the case in others, there's still many gaps that have to be filled and inconsistencies across jurisdictions. And in particular, one should not underestimate, particularly when talking about blockchain, the importance of the legal framework. And it's true, I think, around the world that there are many features of the legal framework, particularly as they apply to payments and cross-border payments, that weren't designed for blockchain. And it will be important for jurisdictions to think through these problems and to consider amendments to legal frameworks that will accommodate the specific features of blockchain. So Brad, maybe it's my turn to ask you a question now.
All right.
It's, I think, particularly appropriate to be here in Singapore talking about blockchain and innovation in the blockchain space because, countries in this region have, I think, been open to these technologies in ways that have helped them leapfrog their counterparts in other parts of the world in many different areas. But, drilling down on a use case, Brad, I think I mentioned remittances. But, from your perspective, what do you see as a really good use case for blockchain in this region? And how can technology address problems?
So this is what I'll call a softball. For those of you who know, when I think about use cases for crypto, certainly Ripple has focused almost exclusively on a cross-border payments problem because it is where we see a very high degree of pain from customers, whether that's measured by how long it takes, how much it costs, or remarkably, and some of you may have had this experience, how little transparency you have into the state of a transaction. I think that what's going to happen in many parts of the blockchain space is you have immense amount of just pure experimentation. It isn't real. They're not solving a real problem for real customers. I've been fond of saying that experiments are not a business model, or certainly not a sustainable business model. Ripple has decided, instead of going very horizontal and talk about lots of different use cases for blockchain, we've gone very deep in solving this cross-border payments problem. As I mentioned earlier, well, I didn't say how many, but we have well over 100 customers worldwide, about 50% of which are here in Asia. One bank that I'll highlight that has been certainly aggressive and progressive in their approach is Siam Commercial Bank in Thailand. And the work they've done is really setting them up to be a next generation hub and solving, as some in the correspondent banking community retract from some parts of the Southeast Asian market, Siam Commercial is actually solving that and using blockchain and even using digital assets to help solve that problem. So I think that while the speed and the dynamics that are solved from the transparency of a much better messaging system are profound, more importantly, I think, is how liquidity, and today, as many in the fintech community know, banks pre-fund accounts. There's almost $10 trillion parked as pre-funded accounts around the world such that banks can then debit and credit and make those cross-border flows work. We have a product that allows banks and allows financial institutions, payment providers, to not pre-fund, thus making that trillions of dollars more active. And we think by doing this, we really do accelerate the global engine of commerce in a way that is good for corporate, is also good for consumers at the remittance level. And I think truly one of the things we think about at Ripple is some of the populations that are most kind of penalized by the dynamics of remittance costs are those that can least afford it. So when I look at what's going on in Asean, I think we have seen, and certainly here in Singapore, we've seen leadership, and I think we're going to continue to see that over the coming 12 months because this is a market where there is more clarity from a regulatory point of view, as Ross was articulating, and so I think that allows companies like Ripple to continue to invest and expand the footprint across this region. All right, back over to you. Sorry, cheating my notes. So I know the IMF has had several very significant meetings lately, Bali being one notable one. I'm curious if the topic of digital assets has come up in those meetings, and if you can share what some of the IMF's views have been about that.
I have to say the Bali annual meetings were really fantastic, particularly on the fintech area.
You look like you got some sun.
That's from my computer screen, okay? But, you know, just on the topic of crypto assets, I think it's fair to say that the fund has taken a somewhat more balanced view towards them than some other commentators have. I think, you know, we first of all recognize that each country has to decide, you know, how it wants to approach crypto assets, whether they think they're good or bad. But, you know, generally speaking, you know, we certainly are very cognizant of the risks that crypto assets present, which I'll talk about in a few seconds. But we also see the potential that they have for making the global financial system more efficient and more inclusive than is currently the case. So the challenge is then to design regulatory frameworks that allow innovation to happen, to allow these use cases to go ahead, all appropriately mitigating the risks. You know, so what are those risks? Well, I think there are several, and I think they relate to some of the specific features of many forms of crypto assets. Their pseudo-anonymous nature in many cases, or anonymous, their decentralized nature, the ability to bypass the use of intermediaries when making transfers, and of course their cross-border, their transnational reach, make them particularly susceptible to criminal misuse in a variety of different forms, whether it be money laundering, you know, terrorist financing, tax evasion, the evasion of international sanctions, where some rogue states have allegedly used crypto assets to bypass the traditional financial system, or fraudulent initial coin offerings. All of these are various risks that regulators need to think about. But it's also true that, you know, the international community has been doing a lot of work on the question of regulation of crypto assets that, you know, can help countries put in place frameworks that will enable the use cases to go ahead. The Financial Action Task Force, the international standard setter in the anti-money laundering space, that has put in place a standard that guides countries on how to design regulatory frameworks to deal with money laundering and terrorist financing risks, came out several years ago, actually, with guidance to its member countries on how to apply their frameworks to crypto assets. And this last month in Paris, they actually amended the standard to provide for more comprehensive coverage of crypto assets. So what approach do they do to resolve this problem? You know, I think the basic approach has been to impose upon new types of service providers in the crypto asset space, service providers like virtual currency exchanges, to impose upon them the same kinds of customer due diligence requirements that banks have to conduct when they allow cross-border payments to go forward. We at the IMF have been an observer in FATF. We've been very much a part of this process, and I think it's interesting to see how the international community is working together in trying to develop approaches in this area. And I think that, if you look what's being done with respect to regulation, anti-money laundering regulation of crypto assets, it's a good model, I think, in some ways, for how regulation may develop in other areas. To give you perhaps three examples out of the FATF approach to crypto assets. The first is that I think one is starting to see entity-based regulation, the regulation of banks or other types of financial entities, being complemented by activity-based regulation, where different types of financial intermediaries engaged in the same type of service are regulated in roughly the same way. So you have, in the field of cross-border payments, you have banks and now exchanges subject to roughly the same types of requirements. The second, I think, important element is to ensure that the regulation you impose is proportionate to the risks. A hallmark of the FATF standard is a risk-based approach. And one wants to develop regulation that guards against the risks, but does not unduly stifle innovation. And I think the third important feature, which I think is a key takeaway, is that international cooperation and regulation is essential. The standard itself serves as a model for countries to follow in designing regulation, but it also shows what can be accomplished when countries work together in exchanging experiences, in discussing approaches, and also in putting in place arrangements where regulators can talk to each other. I think all these are important elements. So Brad, maybe I can now turn the tables on you.
Sounds good.
And ask you perhaps a more philosophical question. How will blockchain transform the global financial sector and more broadly society in the years to come?
Well, so I think this is a good question to conclude on, and I'll give you another plug. We will switch to Pigeonhole here in a moment, although I think Ross and I are both going to make predictions before we wrap up as we look 1 year ahead. But let me touch briefly. I do think it's useful to step back sometimes, and I think we get so caught up in the craziness of the crypto markets, and we lose sight of big picture. What problem are we really trying to solve at a macro level? And for Ripple, that always comes back to a common three words as a refrain, and it's really about enabling an internet of value. I moved to Silicon Valley 21 years ago in the earliest days of the internet that we all enjoy today, and the internet as we know it today was really about data interoperability. I can access any piece of data for anywhere in the world, whether it's a piece of information, whether it's a number. That data interoperability has really catalyzed lots of positive momentum for the global commerce and even global society. When we talk about money interoperability or value interoperability, that doesn't exist today. And if we can make value networks interoperable in the same way data networks are interoperable, I think there's a lot of secondary and tertiary impacts that are hard to predict, but could get very exciting. So in the same way that 21 years ago, I don't think we could have predicted that you could take out your mobile phone and click on your Grab app and have a car waiting for you outside in seconds or minutes or, well, fast. It's hard to predict exactly how some of the dynamics of dramatically improving the speed and dramatically lowering the cost of payments is going to have in terms of changing society. One of the things I'll comment on is there's close to 2 to 3 billion people who are either unbanked or largely underbanked in the global financial society. These are people who, if we can bring them into that community, they have great benefits to that. And there's a reason banks don't serve the underbanked community because they don't want to. They don't serve them because they can't do it profitably. Banks are profit-seeking engines. And if they can serve a customer profitably, they will do so. And so I think blockchain technologies have the opportunity by reducing friction and reducing costs dramatically to totally change the nature of how payments flow. I'll give you one quick example, which is kind of crazy, I admit, is a lot of us don't think about, here in Singapore, I believe you get paid once a month. In the United States, you get paid once every 2 weeks. Has everybody thought about why you get paid once a month or once every 2 weeks? It comes down to the friction of payments. And if we can remove the friction of payments, why can't you get paid every day? Or even more crazily, why don't you get paid every hour or every second? You could have a stream of value showing up in your whatever repository of value. Now, why you need to get paid every second, I'm not sure. But I do think there's a lot of dynamics that have been built around getting paid every 2 weeks or getting paid every month. And as we remove the friction of payments and make that dramatically easier, I think you're going to see secondary and tertiary effects that are very difficult to predict, just like we couldn't have predicted Grab 20 years ago. All right, so with that, before we go to questions, a prediction for what we'll be surprised about 1 year from now.
I think in making predictions in this space, you should probably think of the most outrageous thing you can possibly say, because it'll probably come true within the next 12 months. But I'll be a little bit more conservative, I guess, in my prediction. I think if you look at the work of jurisdictions in designing law and regulation around crypto assets, I think, or fintech more generally, I think it's certainly the case that the level of cooperation and the depth of the conversation will be much greater in a year than it is today. I think there's so much work that's being done at the international level on these issues, not only by the IMF and the World Bank, but also other organizations that we work closely with like FATF, like the Financial Stability Board, or the Basel Committee. Basically, everybody is focused on fintech, thinking through its potential and thinking through regulatory approaches. And this is going to certainly deepen. I think from the perspective of the IMF, I think our engagement with our members will continue to repeat a phrase, deepen. I think the Bali FinTech agenda is something that we regard as a very important development that will help us work closely with our member countries. And I have to say that in all this work, one can't underestimate the leadership at the head of many of these institutions. Christine Lagarde, our managing director, has really been a driving force in our work on fintech. And of course, she'll be a keynote speaker here on Wednesday. But all this to say that, international cooperation is essential, and I think that cooperation is happening in ways that will result in greater cross-border initiatives and, as I say, a more effective conversation about regulation.
So my prediction, about 1 year ago, I actually was here at the Singapore FinTech Festival, and I got in trouble when I went back to the office because the PR team said I had overstepped by predicting that within a year, I predicted that financial institutions like banks would be using XRP in their payment flows. And that was a year ago that I made that prediction, and I go back to the office, and everybody was like, Brad, you're not allowed to say things like that. It turns out I was right, which I remind the team of. So now as I look forward a year from now, what are the things that are hard for us to imagine being true? And not even specific to Ripple or to XRP's community. I think one of the things that will surprise us a year from now is that banks will be custodying digital assets directly. And I think right now we think about that and think, look, there's no way that's going to happen. They're too conservative. And I think what you're seeing is, two things happening. One is banks are seeing that a lot of money is being made by digital asset exchanges globally, and banks are profit motivated. The second, and as we've talked about up here, certainly Ross has made very clear, is regulatory clarity and regulatory frameworks enable banks and financial institutions to lean into these markets. And I think we will surprise ourselves by this time. And by the way, I'll also predict that it will be banks in the Asean markets where there is this regulatory clarity and there is a lot of progressive forward thinking. They'll be the first to actually allow for crypto assets custody in their accounts. All right, with that, we'll turn it over to questions. And I see a bunch of questions on this screen, which I can't really read from here, but we're supposed to pick some. Can you see those? Oh, there's 2 votes.
Let me try.
Do you see IMF holding crypto assets in the future? Oh, they're over here. That's easier. You want to take one? Go for it. The first one's for you. IMF. Do you see IMF holding crypto assets in the future? I did not put that up there.
Remember, I'm from the legal department. I'm supposed to be very conservative about these things. I don't want to go into great details about
Maybe
the IMF.
I should take what the IMF is going to do.
No,
I think we stunned Ross into silence with that one.
For that to happen, under the current legal framework, some country would have to use a crypto asset as its currency.
Which goes to the next question that was on the list, actually. Will central banks issue digital currency become a reality in the next few years?
Well, again, there's a lot of work being done by a number of central banks in different regions of the world. I think generally speaking, many of these central banks are coming to the conclusion that they don't see the benefits right now of doing it, but they're very seriously considering the use case. And I think as work proceeds, they maybe become the possibility may increase. Particularly the Bank of Canada with its Project Jasper experiment has realized that a central bank digital currency on its own may not offer benefits now, but when combined with other things like the security settlement system, the use cases begin to emerge. So let's keep an open mind.
We have a few more minutes. We'll take a couple of these questions. I'll just add to the answer on this one real quickly. It strikes me that there's a little bit, there's a slightly controversial statement about this. Don't central banks already issue digital versions of their fiat? And what I mean by that is when I log into my bank account and I see a number representing my deposits, that's a digital representation. They don't actually have the dollars behind that for everything we have. Moreover, and I think I have some Singapore dollars in my pocket, there's a serial number on that Singapore dollar that, okay, it is 100, but wait, in the US there's serial numbers on here. Yes, there's a serial number on here, 3AX561167. It's in some ways, what's the difference between having a serial number and having a digitization of the Singapore dollar? So I think it's not a very big leap. So the question, I think, was in the next few years, I think certainly you're going to see central governments that have digital currency within the next few years. My prediction. All right. The next one, oh no, we already touched that. Well, how blockchain can